Hello everyone, in today's video we're going to take a look at what the news is for this week. Jackson Hole, Fed meeting on Friday, and then we're also going to take a look at some earnings reports this week and then what the next steps are for everything. The dollar is rising, the overall market. I'm going to take a look at everything. The IWM bounced exactly off of the level that I was talking about in the last video, so we're going to take a look at everything. All right, so without further ado, let's get started with the video. All right, first of all, this is earnings, right? Sorry, this is not earnings. So this is news. Wednesday, 9:45 a.m. We have flash services, PMI data coming out during the market. So this is going to be very important. And then the next most important thing that's going to happen is Friday. We're going to get more data during the market hours, but then Fed Powell is going to be speaking as well. So Friday is very, very important for the overall market. Okay. Now, volatility and everything also might increase heading into that time, but we're gonna have to take it one step at a time because Wednesday is very important, not only for the news that's coming out, but also because Nvidia has earnings on Wednesday. And let me move this. Okay, let me move myself. There we go. All right, so you guys can see basically. Not a huge, enormous week in earnings, but it's a lot of retail names and a lot of IWM related companies, economically sensitive companies. And if they do well, they're going to affect the Russell 2000 in a positive way. So you have Macy's, Lowe's, Dick's, BJ's, Kohl's, Foot Locker, economically sensitive retail stocks, right? Dollar Tree. And then, of course, Wednesday after hours, we have Nvidia. So Nvidia is definitely going to affect the market in a huge way as well. So this is going to be a very, very important day after hours as well. This is going to be interesting. It's going to be a very interesting week. All right. And before we do anything else, right, I want to take a look at, this is the Nikkei. This is the Japanese market on a weekly chart. Okay. And right now we're holding, so this is Bollinger Band, obviously, right? And we're holding the 20 exponential moving average on the Nikkei pretty perfectly. So this is going to be a very, very important time for the Nikkei because there's been a lot of confusion and discrepancies in how the central bank in Japan is trying to tackle the interest rate problem. So this is a pretty important, this is a very important level right now for the Nikkei. So we're going to be taking a look at this. If this can hold, this could be good and bullish for the rest of the international markets, in my opinion. If Japan starts doing well, then that means that there is hope and light, the way that Japan is basically going to be taking their interest rate problem into their own hand, the inflation problem, everything like that. If Japan handles it in a positive way without needing to get that drastic with the way that they're handling it, then it's a positive sign for the rest of the international markets. So we're going to have to see how Japan basically responds here and how the Japanese market responds here. But we can simply also take a look at the rest of the international markets as well. Not as important or in important levels, but the UK, the FTSE, not that great. Basically, the weekly chart on this is also not anything like extremely bullish, right? Clearly downward momentum. Basically, just what I'm trying to show is like it just shows downward momentum, right? And the Hang Seng Chinese markets, we're starting to get very overextended to the downside, but according to the weekly, right, there's been multiple weeks where we could just continue falling lower. So this is the first instance of it. Until we get an open outside of the lower Bollinger Bands on the Hang Seng, then it doesn't really make sense to start trying to go bullish, right? But, aside from that, the international markets are either very important levels of support or they just look bearish. So we're going to have to continue to monitor what each week and what each weekly candle looks like, essentially. But aside from that, the Japanese market is in a very, very precarious, sensitive spot. All right, so there's that for the international markets. Next, we could simply just quickly take a look at the dollar and then the bonds and their relationship to the overall market. And then we're going to take a look at the market. All right. Okay, so we're taking a look at the daily chart of the dollar. The dollar is relevant because if the dollar is bullish, then that usually means that the overall market is bearish. Okay, so right now, what we're seeing is the dollar is at a level of resistance and it's failing to cross above. So if you're trading stocks, obviously this is not a time where you would want to go long. So going long at levels of resistance that are failing to be crossed above, very, very risky and dumb trade to make, right? So going long right now on the dollar is very risky, clearly. So what people would rather see is the dollar come back and retest a level of support before buying into the dollar. So if it does fall and retest, the overall market, as the dollar is falling, should be rising. So the market should be bouncing as the dollar cools off a bit, okay? So right now, the dollar doesn't look exceptionally immediately, right here on this candle, does not look like a great buying opportunity. It would look like a better buying opportunity. Obviously, this is still bullish. We're in an uptrend. I'm not saying that this is a bearish move on the dollar. I'm just saying that immediately it does not look bullish. It needs some sort of a retracement to support. And just regardless, you don't go long at resistance, okay? Do not ever do that. Anyway, so the dollar, it's having trouble at a level of resistance here, okay? The bonds, we saw how the bonds were in a bullish, they were in a bullish pattern, okay? So the bonds, they're more relevant as well because they have a correlated relationship to the market. So if the bonds are bullish, then the overall market is also going to be bullish. So right now, what we saw is the bonds are in a falling wedge pattern. So falling wedges are extremely bullish patterns. When you see falling wedges on shorter term timeframes as well, they are some of the most delicious, easy trades to make, really. Because honestly, if you wait for a falling wedge to appear, if you go long at as close to the bottom here as possible, honestly, and you just have a stop loss below it, you usually get a nice pop to the upside. And usually, on a daily time frame, it also applies. The same patterns apply, right? So this is a falling wedge on a daily time frame. What should end up happening on the bonds is we should be bouncing out of this. This is a bullish pattern. And if the bonds bounce strongly enough and we break above major levels of resistance, then the strength in the bonds will permeate into the overall market. But if we just get a baby little green candle here, that doesn't really mean anything. We need to see some strength out of the bonds, and then that'll push into the overall market. All right. So right now, pragmatically, the bonds are at, and they should be bouncing, and the dollar is at a level of resistance. So both of those things are somewhat bullish for the overall market. I'm not saying this is extremely bullish, but I'm saying it leads to a bit of a bounce, small bounce. I'm not saying this is going to be an enormous bounce, but these are a bit neutral to bullish things that we're looking at on the market right now, okay? Next, let's go ahead and take a look at the IWM, the S&P, and the NASDAQ, and basically just explain to you guys the concept of the Bollinger Band trades, basically, all right? All right, guys, so time and time again, I've explained that when we open outside of the lower level of the Bollinger Band on the IWM, the NASDAQ, or the S&P 500, any of the three large indices, the Dow Jones, anything, any of these large indices, the Russell 2000, the NASDAQ, the S&P, when you open outside of the lower level of the Bollinger Band, usually what ends up happening is we get a bounce back to at least the lower level of the Bollinger Band. So let's just take it. Let's just take this for an example here. And So first of all, in Friday's or Thursday's video, I was explaining how this level here coincided with the 382% fib of the most recent move, as well as the 618% fib of the macro move. So this was a very, very important Fibonacci level. So the 382% fib of the most recent move, and then this also coincided with the 618% fib of the larger move. So I was explaining how 181 in this zone was very, very important for the IWM to hold. And what ended up happening was we fell right to that level. We opened right at that level, and the market just automatically bounced off of that level. And that was the first reason. The second reason was because we opened so far outside of the lower level of the Bollinger Band. And we could go ahead and take a look at the exact numbers here. So we opened at 182.21. The lower level of the Bollinger Band, it's this blue number here, okay? So the lower level of the Bollinger Band was $2 away. So this is literally textbook. Every single time this happens, when it falls to the lower end, it is a very, very, very good opportunity to go long. When this happens, it's not an opportunity to start shorting the market. Sure, in the short term, in the same day, we can end up falling even lower. But all of these are dip buying opportunities. And every single time this happens, for years, I've been explaining that when we open outside of the lower bands like this, clear as day, really, really good buying opportunities. So yeah, that worked out really well. Same concept worked out as well on the Qs, right, on the NASDAQ. And then, of course, same concept worked out on the S&P. So yeah, just now heading into tomorrow, it's going to be important to see if the strength can continue, because generally it does. So what we want to see on the SPY is we want to see a break and comfortably holding above 438 on the SPY. And if it can do that, and if we can see the dollar start to show some weakness, if the dollar ends up breaking below these prior lows here, that's going to be great, because then it would potentially lead to some more a crackdown in the dollar strength, and that'd be great, and lead to a bit of a bounce in the market. If we get above 443, 442, that would be insane. But regardless, I'm not looking for a huge bounce, okay? In the overall market, I'm not looking for a huge bounce. What I'm looking for instead is bullishness. Tomorrow, heading into Monday, after a move like this, or after bottom out potential candles, Monday is not a day where you try to short, okay? It's not a time to try to short. If you try to short aggressively on Monday, it could work, but it's just not a sound trading opportunity. And you're basically hoping that 438 remains as resistance on the SPY. But shorting here, you're basically just like trying to slap it in the face and just hope that it makes another low. But I'd be very surprised if Monday we just don't break above 438 and just make another low on Monday. That would be really, really insane to me. That would just show a lot of weakness. And then people would start piling into shorts, actually. And then we could get a big move down to like 430. More people would be in shorts. And really interesting. It'd be very, very interesting. But generally, because right now the overall momentum is very, very weak, right? It would just be really, really disgusting for the market not to be able to break above 438. And I think that it should. Monday, heading into Monday, I'm not going to be leaning short on the market. I'm going to be leaning long. And also, it really depends on how the futures open today. But generally, guys, just keep it very simple. Generally, if the market is somewhat green and just as long as the SPY is holding above 438, it's not a time to just try to short. And again, you know, like, we know that when you're day trading as well, the first instance of after a drop, right? The first instance where we bounce after a huge drop, that's not a time to short. Okay, so you should get a bit higher here. I'd be very surprised if we fall lower, but basically that's my thought process. Want to see above 438 on the SPY. We can lean long in the day trades, and that should be it. And yeah, just watch for the dollar, watch for a big move in the bonds, and yeah, gonna be fun, gonna be interesting. And also, I guess we could also take a look at the Chinese markets. So we would have to look at how BABA is doing. Because if the Chinese markets can also start to do well, that'd also be good for the US markets as well. But yeah, let's take a look at, basically we just need to take a look at Baidu, BABA, and JD. And if they can bounce, then it'd be good for the overall market, the S&P, the NASDAQ, and the Russell, basically. So yeah, it's gonna be a fun week, and I hope you guys enjoyed today's video. I hope this makes sense, what I was talking about and everything, and I hope that it brings value to you guys. All right, so tomorrow is Monday. Have an amazing Sunday. Get rest. Have a great day, and I will see you guys bright and early tomorrow morning. Thank you. Have a good one. Take care.